Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, April 9th. Hope you guys are having a great day so far today. Um, Again, this will be, if you didn't hear my previous recording, this will be the last one this week. Tomorrow, the markets will be closed due to Good Friday, and then we'll reconvene back on Monday after Easter Sunday here. We do got a lot of data to go over today. We got the weekly jobless claims that we get every week. The previous reporting that came out last week for 2 weeks ago was revised higher from 6.6 million to 6.9 million. Forecasts were calling for 6 million this week, and it came in at 6.6 million. So, of course, now we got almost 17 million people on unemployment, according to the data right now. And then, so that's a pretty big hit. We got the producer price index. This is for the month of March. This is inflation data on the wholesale side of things. So they don't always get as much love as the CPI or PCE, primarily because even though the costs may go up on the wholesale side, it doesn't always get passed on to the consumer, and that's where uh, the Fed and everybody else, investors, kind of look at that. What is the consumer getting hit with? So, with that in mind, we got back in February, it dropped 6.6%. Forecast was calling for a 0.3% increase. I'm sorry, another decrease of 0.3 and then decrease 0.2%. Now, when you strip out the food and energy, we get what they call the core PPI, and it also dropped 0.3%. However, forecast called for zero, basically unchanged, and it actually went up 0.2% when you take out the variables of food and energy. And of course, as you know, we've been seeing gas prices going lower for the month, so that had a big impact of it. To move on, we had consumer sentiment, 89.1 back in March, as it dropped pretty dramatically from its number from like 109 or something like that. Right now, forecast call for 70, and it came in at 71, so pretty close to estimates. But this is the lowest level we've had since 2011, as on this report here. Then we got wholesale inventories, as we see that continuously drawing backwards. So they had a drop of inventories back in January at 0.6%, and February came in at a drop of 0.7%. So let's move ahead here to the headline news, and stocks are up this morning. So you look at those job numbers, you would think stocks would be in negative territory, but reason being is that the Fed's pledge. That's kind of really what's sparking everything so far this morning. They basically pledged that they're going to step in and take care of again medium to size small businesses and relatively large. I mean, they're going from people with 10,000 or less employees, and even if they went with that, the payroll protection plan, they're still eligible for this one program. They're putting in like $1 or $2 trillion worth of loans out there, so they're giving them access to loans to help as a safety net to help them continue. And this is really what's driving the market upwards so far this morning. Investors are also kind of watching talks between OPEC and producers as oil prices, since they had that agreement with Russia, it started steadily climbing upwards, and that's been an important aspect because a lot of the energy companies have been struggling of late due to the dramatic drop in oil in the price of oil. It went from almost $60 per barrel to down like $20 per barrel. Right now, it's sitting right around $25 per barrel, and so we've been starting to see that slightly rise a little bit as we speak because they've been having a little bit of a price war, and which have been kind of struggling. And of course, with the lessened demand out there, and they're producing more oil, those things are sitting around and not being applicable and just losing more and more value as a result due to the volume. So let's move ahead here to the bond market and see how we're playing out. And the bond market is doing quite well. It's going up 33 basis points. It's also testing near the highs we've had, the new ceiling of resistance here. So we'll see if this can maintain here. Mortgage rates should be a little bit better this morning as a result of this. And that's obviously good news for those who are looking to refinance or purchase. We got here the yields started the morning slightly higher, but however they're down to 0.72% right now as a result. So it came pretty close to the 25-day moving average, uh, but it's kind of dipped a little bit down as a result of this. All right, so that's pretty much the wrap. If you guys are looking to refinance or uh, buy here in California, please reach out. We are still helping out a lot of people out here. Uh, I made mention of what I've heard out the industry, what's going on out there, where other a bank was cutting their appraisals, finding excuses. We're still seeing, we're still getting business done, but of course, we work with a lot of different investors, so we're not stuck on any one particular investor. So that's one of the good things that we do. We are kind of like a mortgage broker, but we also have direct relationships where we can do our line fund loans with them, and then uh, fund loans with them, but we also can broker as well. So we kind of have the best of both worlds. All right, so best way to reach me if you're interested is direct message me or email me. Email will be the quickest response time. And I hope you guys have a great rest of your day and look forward to see you guys on Monday. I hope you guys have a great Easter weekend and look forward to see you guys on Monday. Bye-bye.